Hey, it's TSLA, and this is episode 260 of the Orange Pill Investor. And today I want to talk about earnings. MicroStrategy earnings isn't till next week. However, Tesla's is today. And I want to talk specifically about earnings crush and going to track some options prices to see which options it affects. And then we can check back in tomorrow to see if those prices uh, fell prey to earnings crush or not. And just for anyone who has not heard of earnings crush or IV crush, there is a phenomenon in many of the stocks that as earnings dates approach, the implied volatility can increase due to the anticipation of how good or bad the earnings report is going to be. And it doesn't really matter if expectations are high or low. What matters is that the anxiety over that revelation drives up implied volatility. And then once the earnings is announced, it kind of like lets the air out of the balloon and everybody breathes a sigh of relief. The price either goes up, down, or does nothing. And a lot of times you can see this drop in implied volatility can happen the day after earnings is released. And then the 3-month cycle begins again. Implied volatility kind of goes back to its baseline and then starts to climb almost like a roller coaster. Boom, you get to the top of the roller coaster, earnings is released again, implied volatility collapses. So Tesla looks actually like a fairly decent chart for earnings plays. When I used to do earnings plays, I would sell options the day before earnings and then try to buy them back cheaper the day after. The profits are very small, but you can do them on any company really that has a decent looking implied volatility chart like this one. There's plenty of earnings every day throughout the year, every trading day, but it was a lot of work and not necessarily worth the profit in the long run for me. I found some other kind of low maintenance ways to trade. And none of this is financial advice, of course, but I'm going to try to test this theory. So I'm going to take a look at, and one of the things that people ask, and I've asked it myself, and I think I know which way this is going to go, but I would like to take a look at the Greeks and the options prices. And I'm kind of crossing my fingers and hoping Tesla doesn't do anything. Like I hope it just opens tomorrow at the same thing as it closed. That's going to be the easiest way to compare apples to apples. But in any case, I don't think that earnings crush affects the options prices that have expirations before the next earnings. I think this earnings call affects just the expirations that are in the next 90 days. And I don't think if there's expirations greater than 90 days, I don't think IV Crush really works on those. So I don't think you can just wait till tomorrow and think, oh, I'm going to buy cheap options out in 2026 because of earnings crush. I think there might be a little bit of a discount available if something's going to expire in 60 days, anything under 90. But let's take a look. So we'll grab something that's a little bit in the money. So the 150s Holy shit. These short dated expirations, Greeks get kind of out of whack. But implied volatility is 0%. Okay, so this is definitely not updating. Let me try to refresh the screen. That's going to be annoying if they're not updated. I'll try 175. Okay, maybe 150 was too deep in the money, and the calculator couldn't even handle it. Implied volatility is at 160-ish. Vegas 0.0155. So it'll be interesting tomorrow to see if the price on Tesla doesn't change, how much this option costs, and see if that has a direct correlation to this implied volatility number here. All right, let's look at the money. Implied volatility of 130%. Price is 850. And let's check something out of the money. Let's go to 250. Implied volatility is about 121. And the price is only 35 cents a pop. All right, I'm going to go to, let's see, October 23rd, November, December, January 23rd. So anything under, depending on when they have their next earnings call, this January 17th may be cutting it close. I'll have to look and see when Tesla's next earning call is, if it's scheduled. This January 17th, be interesting whether that's before or after. If it's exactly 90 days, it might be before. Certainly the Decembers will be before the next earnings report, and February will be after. This January 17th is real close. I'm not really sure about that one. All right, so let's just check December 20th for sure. What did I do? 175, I think. Applied volatility is only 56. The price of 43. At the money is 210. Applied volatility 54. And a price of 2065. And 250 is implied volatility of 53.8 and a price of about $700 a contract. So let me go to February. I know these are after the next earnings. So let me hit 175. 54% implied volatility. $50 per contract. At the money's 53% implied vol. 28.88 per contract. And at 250 a share. We've got 52% implied vol and $14.30 per contract. And I'm just going to check one more. I don't want to spend like crazy amount of time on this, but let me go out to at least a leaps. Something that's at least 365 days out. So let's do December 2025. The 175. 53% implied vol. Price is $69.75. The 210s, 52% implied vol. Price is 52. And the 250s, 51% implied vol and a $38 price tag. So my guess is that earnings crush will affect the October 25th, November's, all the way through December. Not sure if January is before or after next earnings. And then I don't think anything February or after earnings crush will really affect those. And I'm kind of double checking this because even though MicroStrategy's implied vol chart does not look like Tesla's at all. Tesla, we have pretty reliable implied volatility creeping up, earnings crush. Implied volatility up, earnings crush. Implied volatility up, earnings crush. MSTR just seems to be like doing whatever it wants to do. Maybe this one was increasing and then crushed, but this was that massive spike anyway. So implied vol was reverting to the mean still when we had earnings. So not really sure if this one is reliable, but the most recent one we have, it was still kind of just doing not much of anything. We've got this little tiny blip here. So this is not necessarily a very reliable implied volatility chart around earnings. But what I am considering doing is, since their earnings is October 30th, and their next earnings should be November, December, January 30th, I am going to potentially buy some calls, some short dated calls, the day after earnings for MSTR. So what is that, October 31st? If that is potentially the cheapest that the November, December, January options will be, because the next earnings call should be January 30th-ish, I may look to purchase some December or January long calls and hopefully they will be at the cheapest they can be purchased during that quarter. And they shouldn't cost very much all the way at the top of the chart. Well, actually, they're not all that cheap. So I'll be looking the day before earnings. I'll be taking a look at these prices, maybe these prices. And the reason I don't normally buy calls under 90 days, and in fact, if I have leaps or long calls, I try to start unloading them around 90 days. You can just see when I flipped from January's to December's, the prices crashed in half. So if the price of MicroStrategy does not go up over the next month, these $428 options will only be worth $234. So the value in 1 month is collapsing, which means that the price of MicroStrategy has to go up over that month enough to compensate for the amount of theta that's draining out. And at a 0.06 delta, in order to come up with $200, that's 200 divided by 0.06. What's that going to be? Yeah, the price of MicroStrategy would have to go up like $30 in order to even just compensate for this, I think. Um, yeah, and then I'm just going to cross my fingers and hope the price does go up. But first, I want to do the little research project and see if my prediction is correct that earnings crush is only affecting the under 90 days to expiration contracts. I think that's probably going to be the case, but we'll find out soon enough. Can't wait to do a follow up on this one tomorrow. All right, be good, Joe.